Well, we've got the outlook for the region as neutral for next year. And then here we're balancing a few things. So I guess on the positive side, we still have a relatively stable level of oil prices. We've got good economic growth. So 2026, you're still going to see the solid momentum in terms of non-oil growth, but also obviously higher oil production. So the overall growth level is going to be pretty strong for the region. And then you back this up with continuing reform momentum. So reform here primarily to diversify economies and to improve the business environment. Against that, we still see geopolitical risks in the region as high, and also political risks in some countries. And we think while things have clearly eased from the situation earlier this year, there's still quite a lot of uncertainty around the durability of the current situation in the Middle East. So these geopolitical risks for us will be elevated for some time.
Focusing on the GCC, how does the outlook vary between one country to the next?
Okay, for the ratings themselves, we've got 5 of the 6 GCC countries with stable outlooks. So this follows our upgrade of Oman, which we did last week. So the only negative outlook we have is Bahrain. Bahrain really facing significant pressures on the budgetary side. So our estimate for Bahrain is that next year it will take $134 for Bahrain to balance its budget. So that kind of pressure is important for the ratings. If we think about the economic prospects for the GCC, these are pretty good. I mean, here you can see real progress in diversification of economic bases. A lot of this backed by government spending, but also by reforms, improvements to the business environment, and stronger private sectors across the region. So from a reform side, from a growth side, the story is pretty good. But there are still a couple where the oil price vulnerabilities are quite significant.
So where do you see average oil prices in 2026, and how does that compare with the fiscal break-even oil price for the producers in the Gulf? You mentioned Bahrain, but what about the others?
Yeah, so for 2026, we've got Brent crude averaging $63 per barrel. Again, fairly strong supply. Obviously, we've seen that from OPEC, also coming on from non-OPEC, and relatively sluggish demand. When that comes to break-even oil prices, that's fine for Qatar, for Kuwait, and for UAE. All countries will run budget surpluses at that price level. You should note that in our fiscal numbers, we include investment income, and not everyone does that, but that's the way we include that for our numbers. So that means that for UAE, it's just going to be just over $40 a barrel to balance the budget. Oman, it's kind of 63 is roughly around their break-even level. So again, that's not such a problem. But yeah, Bahrain and Saudi Arabia is the other one where the break-even oil price is above our forecast. So Saudi Arabia, we've got a break-even oil price of $88 per barrel for 2026. Although this is actually lower than what it was in 2025, partly because of some fiscal reforms, but also just purely if you produce more in terms of barrels, then the actual break-even oil price declines.
How do you assess the economic diversification efforts in the GCC and in Saudi in particular? And what would you say are the main challenges?
Sure. Well, I think you can think about diversification from 3 angles. And in terms of diversifying the economic base, I mean, there has been real significant change. And, Saudi Arabia, for instance, when they published their new GDP numbers earlier this year, showed that the economic base was already 20% bigger. And it was all from the non-oil economy. Non-oil economy is more than half of the economy in Saudi Arabia. So we've seen a meaningful change in terms of non-oil economic activity. In terms of the challenges, probably 2. One would be disaggregating the change in economic activity from the high level of government spending. So here we've seen, government spending and spending by government-related entities has been very high. Government's starting to slow spending. What does that mean for non-oil activity? How much momentum is there within the non-oil sector that it can survive slower government spending? The other one is a kind of longer-term assessment of just the value of some of this spending. There is a diversification element. The diversification element is important, But there are some projects that you look at and you think, well, is that really the most effective use of government money? So that's something that might take a little longer to determine. But equally, that's something we can see governments looking at themselves now.